In Florida, the dream of homeownership is not just fading, it is being torn apart one insurance bill at a time. From Miami's coastal condos to Orlando's quiet suburbs, families are waking up to a new reality. They can no longer afford to insure their homes. Rates are skyrocketing, coverage is shrinking, and for some, insurance premiums now cost more than the mortgage. Hurricane risk, flood zones, aging roofs, and a shrinking list of willing insurers have created a perfect storm. It is pushing tens of thousands of homeowners to the brink, canceling policies, forcing expensive coverage, or making them walk away entirely. In this video, we are counting down the top 10 Florida cities where insurance costs are destroying homeownership in 2025, backed by real data, local trends, and the voices of those caught in the middle. Subscribe to Discover the Nation for deep dive breakdowns of America's housing crisis, city by city and storm by storm. Because what is happening in Florida today could hit your state tomorrow.
Number 10. West Palm Beach. West Palm Beach has always symbolized confidence and class, a place where the skyline gleams, the palm trees sway, and the good life feels within reach. But in 2025, even this picture-perfect paradise is cracking under Florida's insurance crisis. Across Palm Beach County, average homeowners' insurance premiums have climbed past $11,000 a year, and for many coastal homes, the numbers are far worse. The problem is spreading quickly. Reinsurers are pulling back, carriers are tightening requirements, and policies that once cost 5 figures now approach 6. For some homeowners, insurance has become their largest monthly expense. Luxury condos along Flagler Drive and in downtown West Palm once represented security and success. Today, they are financial pressure cookers. Entire buildings are facing multi-million-dollar policy renewals, and HOAs are passing those costs directly to residents. In some towers, owners are paying several $1,000s a year in special assessments just to keep coverage active. Others have lost coverage entirely and are scrambling for limited replacement options. Even inland neighborhoods, once considered safe from the coastal chaos, are being dragged into the storm. New flood maps and stricter roof age limits have pushed premiums higher for everyone. Some homeowners are cutting coverage to stay insured, while others are selling and moving north before the next renewal hits. On the surface, West Palm Beach still looks like paradise, with golden skies, yachts drifting down the intracoastal, and streets full of energy and wealth. But the numbers tell another story. Families and retirees alike are realizing that it is not the mortgage breaking them anymore, it is the cost of protecting their home from the next storm.
Number 9. Kissimmee. Kissimmee was once the dream destination for middle-class families, close to Orlando's attractions, filled with quiet neighborhoods, and priced within reach. But in 2025, that dream is harder to protect. Insurance costs are gutting the heart of the housing market, especially for everyday homeowners. Most homes in Osceola County were built in the 1980s and 1990s during Florida's suburban expansion. Back then, the construction was solid, but not built for the intensity of storms and insurance scrutiny seen today. Now, roof age, wind mitigation, and outdated systems can make or break a homeowner's policy. Premiums have exploded. The average homeowner in Kissimmee is paying more than $6,400 per year, and that does not include flood coverage. For short-term rental owners, it is far worse. Properties near the tourist corridors have seen rate increases of more than 100% in just 2 years. Investors who once bought vacation homes for steady income are walking away or selling at losses. Insurance has become the new affordability crisis. Lenders are rejecting mortgage applications when buyers cannot qualify for both payments. Realtors report that nearly 1 in 4 home sales in Kissimmee now collapses during the insurance verification stage. Locals are facing impossible decisions, paying massive premiums or going uninsured. Some are cutting wind or flood protection entirely, hoping luck will spare them from the next big storm. It is a dangerous gamble that could send the market into freefall if another hurricane season turns severe. Kissimmee still shines in postcards, with palm-lined streets and Disney fireworks glowing on the horizon. But beneath that postcard image, families are struggling to stay insured, and the idea of affordable homeownership is disappearing. This is only the beginning. Insurance costs are reshaping who can afford to live in Florida.
Number 8. Cape Coral. Cape Coral was once the symbol of Florida's dream life. Miles of canals, endless sunshine, and affordable waterfront homes made it one of the fastest-growing cities in the country. Families came for opportunity, retirees came for peace, and investors came for profit. It looked like paradise in every sense. But by 2025, that paradise has become one of the epicenters of Florida's insurance crisis. Insurance premiums in Cape Coral are now among the highest in the state. The mix of hurricane exposure, flood risk, and aging infrastructure has turned coverage into a luxury. The lingering impact of past disasters, especially Hurricane Ian, continues to push rates higher. What was once a manageable expense is now the breaking point for thousands of residents. In Lee County, the average homeowner pays between $10,000 and $12,000 a year for insurance on a typical home, and many coastal properties pay far more. Lenders are rejecting outdated or insufficient policies, forcing owners to find costly replacements. Citizens, the state's insurer of last resort, now carries nearly 1/3 of all active policies in the region, showing how many private insurers have left. For retirees on fixed incomes, these costs are impossible to sustain. For new buyers, they are a deal breaker. Realtors report that transactions are collapsing not because of home prices, but because of insurance quotes that make ownership unrealistic. Entire neighborhoods that once thrived with new arrivals now sit quiet as listings linger for months. Even those who can afford coverage are starting to question whether it is worth it. Waterfront owners are paying premiums that rival property taxes in coastal California. Others have dropped coverage entirely, taking the risk of self-insuring just to stay in their homes. Cape Coral still shines under the Florida sun, its canals glimmering and palm trees swaying in the breeze. But the beauty hides the burden. The water that defines the city now threatens it most.
Number 7. Fort Lauderdale. Fort Lauderdale has always been the symbol of effortless wealth, a place where yachts glide through blue canals, glass towers shimmer above the intercoastal, and luxury feels as endless as the sun. But in 2025, that perfect image is cracking. The threat is not the hurricanes this time, but the insurance system meant to protect against them. In Fort Lauderdale's most desirable neighborhoods, including 33316 and 33301, homeowners are now paying between $15,000 and $20,000 each year for insurance. These are not sprawling mansions, but ordinary waterfront homes that once cost a fraction to protect. Major insurance carriers have withdrawn, citing high storm exposure and rising climate risk. Thousands of residents have turned to Citizens Insurance, the state's last resort, where coverage is limited and exclusions leave families dangerously exposed. Condo owners are under equal strain. Along Los Olas and Fort Lauderdale Beach, building associations are passing special assessments of $3,000 to $6,000 per unit just to stay insured. Retirees and fixed-income residents are being pushed to the brink. Insurers are demanding costly inspections before renewals, and even minor issues can jeopardize coverage. Realtors say wealthy buyers are walking away after seeing their quotes. Sellers are slashing prices, and developers are delaying projects that once promised to reshape the skyline. Confidence in one of America's richest housing markets is fading fast. Fort Lauderdale still dazzles under the sun, palm trees sway, boats glide through shimmering water, and every corner looks like paradise. Yet beneath the surface, a quiet financial storm is spreading, one policy at a time. Subscribe to Discover the Nation for an inside look at Florida's housing transformation. We uncover the real numbers, the pressure points, and the personal stories driving this crisis. Because Fort Lauderdale's unraveling is not just a city story, it is a warning for every coastal community in America.
Number 6. Pensacola. Pensacola has always been one of Florida's best-kept secrets, a Gulf Coast haven where affordability, small-town charm, and coastal beauty seemed perfectly balanced. For years, it offered what Floridians wanted most, peaceful living without the high costs of Miami or Tampa. But in 2025, that calm has been shattered by a financial storm few can escape. Insurance has become the new threat, and Pensacola is feeling the full force of it. Premiums across Escambia County have surged more than 45% since 2023. Even homes miles from the shoreline are now included in mandatory flood zones under new FEMA maps. Neighborhoods that once felt secure are suddenly labeled high risk, doubling insurance bills for many families overnight. The average homeowner now pays between $8,000 and $10,000 a year for coverage. Along the coast, in areas like Perdido Key and East Hill, premiums reach $15,000 or more. Private insurers are withdrawing, citing hurricane exposure and aging infrastructure. Residents are left with limited state-backed coverage that costs more and protects less. The ripple effects are everywhere. Home sales are slowing, lenders are rejecting applications, and roof replacements that once cost $20,000 now approach $40,000. Contractors are overwhelmed, and insurers demand flawless inspections before renewals. Even longtime residents are anxious. Retirees and military families who built their lives here say the math no longer works. The city that once promised affordable coastal living is slipping away from the people who made it thrive. Still, Pensacola remains breathtaking. The white sand beaches glow at sunset, the ocean breeze drifts through the palms, and its charm endures. But beneath that beauty is a growing crisis. Insurance is rewriting what it means to live in Florida, and Pensacola proves that no corner of the state is safe from the rising cost of protection.
Number 5. Sarasota. Sarasota has always been where luxury meets lifestyle, with world-class beaches, a vibrant art scene, and some of the most desirable homes in Florida. But in 2025, that beauty hides a hard truth. Insurance has become Sarasota's most expensive burden. Average homeowners insurance now exceeds $9,000 per year. For coastal or historic homes, it can easily double. Waterfront estates near Siesta Key and Longboat Key often face premiums above $18,000. Even inland, mid-range homes are hit with windstorm requirements, impact glass mandates, and hurricane deductibles that add thousands more. Historic districts are suffering most. Older homes are being rejected by private insurers, forcing owners into costly state-backed coverage with limited protection. Condo boards are passing steep special assessments to stay insured. In some communities, HOA fees have doubled in 2 years, not for improvements, but for survival. For retirees and snowbirds, Sarasota was once a dream. Now, it feels like a financial trap. Realtors say insurance quotes shock buyers more than home prices. Deals collapse daily. Even luxury buyers, once unfazed by cost, are walking away. The crisis is reshaping neighborhoods. Some owners are selling early to avoid future hikes. Others are downsizing or leaving the state entirely. Investors who once saw Sarasota as a sure bet are backing out, leaving listings to linger. Still, Sarasota remains stunning. The turquoise water, the palm-lined streets, and the golden sunsets over the Gulf still make it a picture of paradise. But beneath that beauty lies a warning for all of Florida. Even paradise has a price, and that price is climbing fast. Subscribe to Discover the Nation for in-depth insight into Florida's changing housing landscape. We uncover the truth behind rising costs, collapsing deals, and the insurance storm threatening the Sunshine State. Sarasota's struggle is no longer about luxury. It is about survival.
Number 4. Tampa. Tampa was once the shining example of the Florida dream, a city where opportunity, sunshine, and affordability seemed perfectly aligned. From the glass towers of Water Street to the quiet communities of Riverview and Carrollwood, Tampa defined growth and optimism. But in 2025, the city has become ground zero for Florida's insurance crisis, and the impact runs deep. Premiums have surged nearly 60% since 2022. Homeowners who once paid $4,000 a year now face bills of $8,000 or $9,000, even for homes with new roofs and storm-resistant windows. Flood insurance, once optional, is now mandatory, as new maps expand risk zones. Citizens Insurance, the state's last resort for those rejected by private carriers, is at its limit. Along the Hillsborough River, insurers are quietly withdrawing. Some demand complete roof replacements every 10 years, even when the roofs are still in good condition. Deals are falling apart, buyers are backing out, and sellers are cutting prices not because values have dropped, but because the cost of insurance makes ownership impossible. Even new construction is slowing. In fast-growing areas like Wesley Chapel and Apollo Beach, developers report buyers walking away after final insurance quotes arrive. Lenders are refusing to close loans without verified coverage, leaving families stranded between approvals and cancellations. Tampa is still vibrant. The skyline glows at sunset, the beaches draw crowds, and the city's energy remains alive. But the cost of keeping that dream alive has changed. Affordability in Tampa is no longer about the price of a home. It is about what it costs to protect it. Subscribe to Discover the Nation for clear and powerful insights into Florida's housing storm. We reveal the numbers, the costs, and the stories behind every headline. Because in Tampa and across the Sunshine State, the real storm is not the weather above, it is the insurance system that is reshaping the meaning of homeownership itself.
Number 3. Miami. Miami has always thrived on confidence, a city built on style, energy, and the belief that nothing could shake it. But in 2025, even Miami's glittering skyline hides deep cracks. Insurance costs are shredding its housing market, and no level of wealth seems enough to weather the storm. In coastal zones like Brickell, Edgewater, and South Beach, average insurance premiums now exceed $25,000 a year, and that is for modest homes under 2,000 square feet, not mansions. Luxury estates and waterfront condos can easily surpass $50,000 in combined premiums and assessments. The risks keep stacking up. Rising sea levels are eroding foundations. Saltwater corrosion is damaging infrastructure. Storm surge predictions are worsening, and new climate models show greater threats of powerful hurricanes. Private insurers are fleeing, leaving behind limited state-backed coverage that barely scratches the surface. Condo associations across Miami-Dade are in turmoil. Many are paying millions annually for building-wide coverage. Special assessments between $10,000 and $20,000 per unit are now common just to stay insured. Some buildings are collapsing financially under the strain. Even high-income residents are feeling trapped. Realtors say buyers walk away after seeing their quotes. Investors are retreating from the luxury market, and property managers warned that insurance, not demand, is what is breaking Miami's real estate machine. Miami still shines on the bay, bright and alive, but behind the glamour, the tension is real. The city that once sold the dream of limitless luxury is now facing the price of its own paradise.
Number 2. Naples. Naples was once Florida's crown jewel, a coastal masterpiece where wealth and serenity blended effortlessly. But in 2025, the shine is fading. Beneath its polished neighborhoods and pristine beaches lies a city caught in a coverage crisis. Luxury homeowners in Collier County are now facing insurance quotes exceeding $30,000 a year. And that's not for palatial estates. Even mid-range homes are seeing premiums that rival annual mortgage payments. Inland areas, once considered safe havens, are now subject to climate surcharges and reinspection requirements that drive costs even higher. The exodus has begun quietly. Retirees who built their dream homes here are selling sooner than planned. Investors are walking away from deals, and homeowner associations across Naples are buckling under the financial strain. Some have resorted to emergency assessments just to maintain their policies. Others are losing coverage entirely, leaving entire condo complexes uninsured. For decades, Naples symbolized safety, a fortress for wealth and retirement. But the cracks are visible. Insurance carriers are pulling back, citizens' insurance is overwhelmed, and private coverage for luxury coastal properties is nearly impossible to find without astronomical deductibles. Even longtime residents are beginning to question the sustainability of the market. Realtors report more out-of-state sellers than buyers for the first time in years. High-net-worth individuals who once paid cash for properties are rethinking Florida entirely, choosing states with lower climate risk and stable insurance markets. Naples still sparkles. Its sunsets still paint the Gulf in gold. But beneath that postcard perfection, homeowners are paying the price of paradise. Literally.
Number 1. Key West. Key West has always been the edge of paradise, a place where the sunsets never disappoint and the ocean feels endless. But in 2025, it has earned a new and painful title: the most expensive city to insure in all of Florida. Here, insurance isn't just costly, it's catastrophic. A modest single-family home can cost $38,000 per year to insure. That's before flood coverage, windstorm riders, or association fees. For larger or waterfront homes, premiums often exceed $50,000 annually. Why so high? The reasons are both geographical and structural. Key West is isolated, sitting far from mainland infrastructure. Every storm risk, every flood prediction, every Category 5 warning directly impacts the market. Private carriers have almost entirely withdrawn, leaving a handful of options that are either unaffordable or so limited they barely count as coverage. Homeowner associations are collapsing, landlords are walking away, and residents, even lifelong locals, are facing impossible decisions. Many have chosen to drop coverage altogether, gambling that the next hurricane won't destroy everything they own. Real estate agents describe a city frozen in fear. Properties that once sold instantly now linger for months. Investors are gone, and retirees who once saw Key West as a final destination are leaving quietly, unwilling to spend another year paying more in premiums than their property taxes and maintenance combined. Yet, Key West remains breathtaking. The pastel cottages, the turquoise water, and the nightly celebrations at Mallory Square still capture the spirit of Florida's paradise. But behind the joy lies exhaustion. The cost of living in this dream is no longer measured by mortgages, it's measured by survival. If you want to understand what's really happening across Florida's coast, subscribe to Discover the Nation. We're revealing the truth about how insurance is reshaping the American dream one city at a time. Because in Key West, the paradise is still here, but the price of keeping it has never been higher.
So what happens next? Florida's insurance crisis is no longer just a coastal problem, it's now a statewide emergency. And for many families, it's the one cost they can't budget for, plan around, or negotiate down. From Ocala to Key West, insurance is destroying affordability, scaring off buyers, and unraveling markets once considered stable. Subscribe to Discover the Nation for real housing data that matters. No fluff, no hype, just the truth. State by state, storm by storm. Because the Florida dream is under threat, and if insurance continues to rise, homeownership may no longer be part of it.